What's going on, Chris here? As far as the Covey portfolio performance, we're going to put that in a different video because it's the start of the month. So we're going to work on building the strategy and the plan for the portfolio. It's very similar to what we did December. It's just we're kind of scaling back in the position to the short side. Right now we got a long for S&P 500, and we want to get rid of that and go short, but we're waiting for it to flush out to where we can do that. So that's on pause. Ninja portfolio performance, no real change really. It was a wash on the trade yesterday, and a very interesting case study that I'm planning to make, and to prevent further mistakes. Daily closing thoughts, S&P 500. What we're going into first. So S&P. This is the wrong one. On the weekly, we're at weekly support, and it would make a good long risk to reward wise. Technically, we're at the middle or 50% zone. We were to put a fib there. Yeah, we're right in that middle area. So highly contested of what's going on, but in terms of weekly support, we're at weekly support, and it's holding. And right here, we've rounded. We made some rounding bottom, and we've swing failure pattern. The bears tried to swing lower, but it failed. Reclaim. This resistance turned into support on this candle close on here, and then validated by this candle, but invalidated by the candle after, two candles after the reclaim. And then now we're getting resistance from that failure line. And but it's making a really good case for the bullish side because of this deviation. Of course, the trade setup is invalidated the moment we cross below this low, or where the bears are trapped. But we're assuming that anywhere near these support lines is like a really good long to the upside. So we'll see where we end up today. We could be retesting lower here before we go higher, and that would be not something beyond something that can happen. That could totally happen, and most likely will before we head higher, just because on a smaller time frame like the hourly, we are putting in a swing failure, like highly likely. So I wouldn't be surprised if we go short again back underneath this, uh, for a lower high, and then swing failure, and then reclaim, and then bull flag Thursday into Friday. So it could be an equal low, or it could go down into here. We have no idea. But in terms of risk to reward, it's hard to say which one, uh, which way we should be aiming for the best risk to reward play. But it does look like the Bears are having a lower and lower reward for every time they attempt to go down into this area in the buyer zone. But we're gonna stand by and just see what happens next. But that's the S&P 500. We go here on the market structure break. We haven't really had any break. We just have the target, which is up here. and we're slowly waiting for that rounding bottom to round out. So that's that. Oil. So on the weekly, we came into resistance. We failed on the close of previous week, and then we opened. We wicked above, and then came back below, and then tested support, and then pretty much blew through it, and getting ready to go lower on the week. So I mean, we don't even need to look at the daily, but it's putting in a mini swing failure pattern. So resistance here, deviation, or left shoulder, head, right shoulder, and then neckline support. So we're waiting for that to play out. As far as like market structure standpoint, we're in a nest, so it makes it really difficult to want to trade, or it's going to ping pong. So I mean, to monetize this chop, it almost seems not worth it for risk to reward. Taking on that risk, might as well just wait, right? And that's kind of just what the S&P 500 looks like. Like any kind of risk to the downside, it's better just to wait. The reward is very minimal. I mean, some people are able to do really well off of the waterfalls to the downside, but none of them really succeed in going past like more than 3%, more than 2%. It's getting smaller by the day. But we've had some volatile days recently to where it was more than 1% on the S&P 500 and oil. So then now next we go into the credit spreads. So credit spreads, we look on the week. We're just slowly going down, and we close below support on this candle. There's the close. Retested on the candle after, wicked below, and ever since it's just been going lower. It's going to want to go test support. And then we go on the daily. It's like pretty much the same story. What is this copy price? It's just now the weekly, monthly, yearly open is a huge resistance point. It's going to want to go lower, test this support, and fill the gap down here. So it's not looking good for credit spreads. And if the S&P 500 goes up and the credit spreads go down, would make a divergence and a huge sign to sell, or that there's going to be a huge swing to the downside for the S&P 500. Now we go to the currencies like the euro. Euro is starting to roll over, which is a sign of risk-taking behavior for equities when the euro goes up. And fundamentally, I don't know why that is, but it looks like we're rolling over. We got to see this week's close to flip the weekly support. But if you wanted to get in for a short, it would be a really good opportunity at this yearly, monthly, weekly open to short anything that gets close to that area. Now we go to the Japanese yen. At weekly resistance, and it's got like a gap here. If we were to line it up here, it looks like right at support, so just beneath the weekly, monthly, yearly open. It looks like it's gonna retest below it, and anything that's a reclaim up back above the monthly, weekly, yearly open would be a good long for the Japanese yen. And too bad I can't put then the Covey portfolio because I would. But that's pretty much it. It's the credit spreads, the currencies are all showing fragility. I don't know what Japanese yen is a safe haven currency, and then the high yield growth credit spread, high yield growth bonds credit spreads are they're selling off. The yield is going higher, price is going lower, and it's showing that hey, there's something wrong. And then once the dumb money gets in the scam pump for the upside for this B500, it's over. It's a nice time for everyone to jump off, jump off and see who's left on the musical chairs, and see who's following Jim Cramer and his advice. But yeah, we're gonna see what's gonna happen next, and videos to come. Charles Schwab thematic portfolio, Robot Revolution, 25 stocks down to 10. We're taking the theme portfolio that they have, and it's 25, and bringing it down to 10. Possible trade plan for Wednesday, and portfolio plan for Covey coming next.